Hi, Kathy Osmar, Coldwell Banker Apex here, and I'm here today with Chad Milner. He is with Integrity Mortgage. He's the lender that we use, and we've been working with Chad personally for over 10 years. So I'm here with Chad. We're going to talk a little bit about the market today, the pre-approval process, and a few things. So first I'm going to let Chad introduce himself and tell us a little bit about you, Chad.
Absolutely, yeah. Chad Milner, Integrity Mortgage, been in the mortgage business for about a little over 9.5 years, I guess. So all with the same great company. We're a small family-owned bank. Our operations, everything is here in Heath, Texas. So processing, underwriting, you name it, we got it all here. We fund with our own money, but we have the ability to shop your rate to get you a great product out there and have solutions for kind of everybody in whatever individual place they may be in. So.
And what type of loans do you do, Chad? Tell people that, because I think they'd be interested.
Yeah, so in this market, it's good, right? So we have different options like conventional, FHA, VA, USDA loans as well. So we can also offer jumbo if you're in that market.
Okay, and USDA may be something you don't know about. That's in certain rural areas throughout Texas, well, the U.S. that qualify for that. So there's only certain areas that can be USDA.
Yeah, correct. And you would think you live in the Dallas Metroplex, right? USDA, that sounds like you're talking about farmland, but there's actually areas in and around Dallas that are USDA qualified and eligible. So yeah, if you think you're in the outskirts of Dallas and want a little longer commute, or now with COVID, everybody's working from home, right? So it gives you the ability to live a little bit further out and maybe take advantage of that USDA product.
Yes, and we're seeing that. We're seeing more people move further and further out.
Absolutely.
Because maybe the cost of housing is a little bit less further out, obviously, and different things like what you're saying, USDA loans. So those are great options for people. Chad, can you tell us a little bit about, because people don't know, a lot of people don't know this or understand it, about the pre-approval process and what's the difference between just a pre-qualification and a real pre-approval?
Absolutely. It's funny because people, obviously they kind of flip the script. Normally they come to real estate agents, they're like, oh, we're just going to go look at homes and then we'll make an offer, right? Well, it should start with us on the lending side. So you'll come to us, we'll do a pre-approval. That's what we like to do here at Integrity Mortgage. And the difference is if you do a pre-qualification, they're going to ask you general questions. Where do you work? How much money do you make? How much money do you have in the bank? And then they'll run a credit report for you. Well, in today's market, it's a little bit more difficult than that sometimes to get those pre-qualifications or sellers to accept those, right? So we do full approval. So on the front end, we get in your asset, your income documentation, we verify that, we underwrite it, we actually run it through an automated underwriting system as well with Fannie Mae and Freddie Mac to confirm that you are fully approved, and then we will provide you a letter so that you can give that to the seller when you present your offer.
And tell them a little bit about why that's important. Is that going to help them know how much they're qualified for, what they can spend, maybe what their payments are, and what does underwriting mean to people? Because a lot of people have no clue what underwriting is.
Yeah. So it's absolutely going to help you get a better understanding of where you are, right? Because you think you may qualify for a $500,000 house, and you may, right? But you may not want to go that high. So what we do is we firm up the numbers. So we verify that income and get you in a good position where we're like, we know your debt to income ratio is going to be in a great place. So debt to income is all of your outgoing debts, including the new housing payment, versus what your gross monthly income is. So we can verify that on the front end to make sure you truly qualify. And then with that information, we can also get you payment options and solutions based on what your comfort level is. Because just because you can afford a $500,000 house doesn't mean you necessarily want to.
That's right. It's all about the payment.
That's right. That's right.
You live in the payment. And can you tell them a little bit about what things you look at? Like I know you look at credit score, and what are a few other things that you look at to get someone pre-approved?
Sure. Yeah. So different loan types obviously are going to make us look at different things, right? So credit scores, obviously that's the main thing we're going to look at on the front end. Credit scores, your debt, your income, your work history, the amount of assets that you have saved for down payment and closing costs. If there's any reserves that are required, we look at that as well. So we'll kind of go through all those facets to make sure that you're well qualified to buy.
And you still have to have 2 years of verified employment in the same industry to qualify, or has that changed any?
Not necessarily in the same industry.
Okay.
A lot of times we want it to, maybe what you were doing before may translate into what you can do now.
Okay.
But it doesn't necessarily have to be in the same industry. However, we do want a 2-year work history in general. So you're going to need, full 2 years of employment.
Right. What if you're self-employed?
Self-employed is a little bit different animal, right? So
I'm asking because a lot of people are self-employed, myself included.
Absolutely. So you may hear horror stories out there, right? So the biggest thing on the front end is to come to a lender and get fully credit approved if you're self-employed, because we're going to review 2 years worth of your most recent tax returns in most cases to get you qualified. There are some instances where we can only utilize the most recent year. So if you've been in the industry for about 5 years, typically we can look at just the most recent year to try to get you qualified. But as most self-employed people, right, if you have a good tax preparer, maybe you don't show as much income on that tax return because obviously you're going to pay more taxes,
That's
right?
true.
Which is
Yes.
so there's definitely a balance to it,
Right.
and we want to go through that with a fine-tooth comb to make sure on the front end you're going to be good.
Okay, thank you, Chad, very much. Now, let's shift a little bit, just
Sure.
like the market has.
Yeah.
We're going to shift our conversation. We're going to talk about the market currently a little bit. We all know the interest rates are rising, and so some of the buyers are stepping back, or maybe they think they can't afford it when they still really can. If they
Sure.
could talk to you, you could find creative ways to help them. So the good news is for buyers is it's kind of become, they have definitely more options. More listings are coming out all the time. Fewer buyers to compete with. People aren't paying 30, 40, 50, 100,000 over like they were. So this is a great time for buyers. So can you talk a little bit about that?
Yeah, we're definitely seeing a shift, and it's been a pretty significant one. So whereas previously sellers had the upper hand, right, we're seeing buyers that have a lot more leverage in today's market. And so what that means for buyers is you don't have to walk into necessarily a competitive situation on every offer that you want to make, right? So with that, you can maybe come in a little bit lower than their asking price, or since rates have ticked up, we're doing this a lot as well. So instructing buyers, hey, maybe you go in at the asking price, but you ask the seller to pay X amount of dollars in your closing costs. We utilize those seller concessions to help pay down that rate, right? So yes, rates have risen,
Right.
but you can pay discount points, buy that rate down to get it to a more favorable term for you, and maybe keep you in that qualification level that you're wanting. So
Right. And if something happened where they came down later, you could always refinance.
absolutely.
So there's an option on down the road. Not saying it's going to be tomorrow, obviously, but I'm just saying you never know what's going to happen. So
Yeah.
that would be another option on down the road.
Yeah, the future outlook is that, obviously in the next year and a half or so, we'll probably see those rates come back down as the market starts to settle. Inflation's the main topic. That's
Right.
all you're hearing in today's market,
That's
right?
it,
So
yes.
as long as inflation's up, I think we'll see rates still a little on the high side, but once that tapers off, we'll see the Fed fund rate, which is not a direct correlation to mortgage rates, but it does have an impact.
Okay.
We'll see that start to come down, and that's going to influence the bond market, which is going to drive those rates down a little bit.
Okay. That's great information. Is there anything else we might need to know about that?
Yeah, if you're on the fence, now is still a good time to buy, because like I said, it's not as competitive out there. So when you were paying all the seller fees previously, and you were paying X amount of dollars over that list price, and getting something or getting into something that at a more valuable or more higher cost, right? Now you're able to try to get into something at a more reasonable cost.
Right.
You can always refinance later.
And rents keep ticking up. They're getting out of control too.
Oh,
So,
yeah.
you might be way better off to own your house than to be paying rent, and it keeps going up all the time.
Yeah.
So, at least you have something when you have home ownership, you have an investment. And also it's been shown that people that own a home actually have a lot more wealth. This is research. I just didn't make this up. Have a lot more wealth than people that rent.
Yep.
Last time, I don't know the exact number right now, it was like 44% more wealth. So that's
wow.
a huge amount. So,
That's big.
I mean,
you're either
that's-
paying somebody else's
Yep,
mortgage
you
or
are.
you're paying your own.
yeah,
So,
so it's always a great time to buy.
Yep.
It doesn't matter. It's always a great time.
yep, and we'd love to help you.
Yes.
Kathy's
Call
excellent at what
Chad.
she does, and I would love to help you with your pre-approval.
Yes,
So,
call me first and I will hook you up with Chad. How's that sound?
Fantastic.
Yeah. So if you're thinking about buying, it's still a great time to buy. Give me a call and we can talk about your options, and then I will send you to Chad and he can talk about all your other options.
I love it. I love it. We're here to help.
Yes, we are. We're always here to serve. So thank y'all, and thank you, Chad, for taking time out of your busy day.
Yeah, thank
Thanks,
you.
Chad.